Welcome to the Real News Network. I'm Sharmini Pires coming to you from Baltimore. Newly minted chairwoman of the Federal Reserve, Janet Yellen, Monday in a speech laid out her plan to deal with the considerable slack in the U.S. economy and the labor market, implying that the Federal Reserve would continue a highly stimulative monetary policy for the foreseeable future. In a carefully crafted speech that sets her apart from her predecessor, she appealed to those that supported her appointment. To discuss all of this and more, we are joined by Robert Pollin. Robert Pollin is a professor of economics at the University of Massachusetts Amherst. He is the founding co-director of the Political Economy Research Institute, PERI. He is the author of many books, the latest among them, Back to Full Employment. Bob, thank you for joining us. So Bob, what is your take on Janet Yellen's latest speech she made last week?
Well, it was her first speech as the new chair of the Federal Reserve, and she delivered it this past Monday, 4 days ago. In some ways, I think it's truly extraordinary, the speech. Why? Well, number one, she gave the speech in Chicago, not in New York on Wall Street. She gave it it was at a conference for community organizers, not a bunch of Wall Street bankers. She explicitly said that the job of the Federal Reserve is to worry about Main Street, not Wall Street. She talked about the plight of unemployed people. She described 3 unemployed people by name, full names, and she told some of their stories and the difficulties, the struggles they're facing. I think this is extraordinary, if not totally unprecedented, for a chair of the U.S. Federal Reserve, or for that matter, any central banker ever, to have made this kind of statement as her opening inaugural statement. And I think there's 2 kinds of basic lessons and points to extract from this. Number one, we have to remember how Yellen got in this job. President Obama didn't want to appoint her. He wanted to appoint Larry Summers, who is very much a dear friend of bankers on Wall Street. It was really only due to the pressure, extreme pressure from social movements, political people, unions, to fight to prevent Summers from getting appointed and to support Yellen. That's the only reason why Yellen is in this job. So that's an important lesson, that progressives can deliver victories if we're well-focused, well-organized, and if we have someone of Yellen's qualities that we can support.
Bob, as you say, the Fed has been following these same policies for the last 5 years. Why is Yellen different, and why should we believe her compared to her predecessor?
Right. So the speech was designed to support the policies that the Fed has been pursuing now for basically 5 years, which is to maintain the short-term interest rate that it controls, the so-called federal funds rate, to maintain that rate at 0. And now, at one level, that appears to be extremely accommodative, extremely expansionary, stimulative. Well, you can't get an interest rate lower than 0. And that's the way that they think, by providing credit at next to 0 or 0, that businesses are going to borrow and create jobs. The problem is, and this is a fundamental problem, I love the speech, but we need some action too. The problem is we've been running this policy for nearly 5 years. And as Yellen herself acknowledged, we still have a massive problem of unemployment. By the Fed's own broader measure of unemployment, we're at something still at around 13%, 20 million people. This is 5 years after the recession officially ended. So the policy is not adequate. And no matter how wonderful Yellen's speech was, the policy is still not adequate. So what do we do? Number one, the reason why the policy isn't adequate Banks are getting free money. Okay, they can borrow for free. We know that. That's the policy. The problem is the money goes to the banks and it stays stuck in the banks. The banks are hoarding money. I just checked right before I came on, as of the most recent data from the Fed itself, the commercial banks in the US are holding $2.3 trillion in cash. 2.3 trillion. That's about 14% of US GDP. Move that money out into the economy, you end the unemployment crisis. Keep the economy, keep the money stuck at the Fed and the banks, hoarded by banks. That's why the Fed's policy isn't working. So you must move that money out into the economy. And the first step in doing so is to tax the banks. If the banks are going to take the money from the Fed, which they can take for free, then they have to be responsible for moving it into the economy. If they're not, the money has to be taxed until the banks start feeling it and feel the incentive to find loans to make, especially to small businesses. At the same time, the banks are hoarding cash, small businesses continue to be starved for credit. The net lending to small businesses is effectively zero, has been for 5 years.
Bob, are there any indication that Janet Yellen is going to be doing business unusually in terms of forcing the banks to spend the money and having different rules of engagement in terms of receiving this free money and what they do with it?
I don't think, there are no clear indications that she's going to take extraordinary measures beyond the one. I mean, yet holding the interest rate at zero is itself extraordinary. I mean, it's never happened in human history, to my knowledge, that the central bank is giving out free money, not for 2 months, for 5 years. So that in itself is extraordinary, but we've tried that and it isn't enough to get the job situation to improve dramatically. That's the evidence. So now they have to move beyond that. Is there evidence that Yellen is about to do anything? No, not yet. But that's why she has proven that she at least hears, she at least is aware that there continues to be mass unemployment, that her job is to deal with that. I mean, that is a major improvement relative to her predecessors. And the job of people who care about these things is to keep pushing on Yellen. So far, the signs are quite good. That she did make this speech. She directly said that she cares about people who are unemployed. She even said, we can keep training people, but if there aren't the jobs, then there's no point. Training doesn't do it. The job of the Fed is to stimulate jobs.
So is this a preface, Bob, in terms of continuing to give free money and not holding them accountable to spending it? I mean, we know that, and you've been saying that, but more importantly, what is it that she can actually do in order to ensure that this money gets spent in a way that creates jobs?
Well, like I said, the first thing the Fed could do, they don't have to ask Congress. They can tax the bank's hoards. That you don't call it a tax. If you call it a tax, then you have to get approval from Congress. By the way, Congress should pass this in 1 second. The Republicans should be out fighting for it because it helps small businesses, and Republicans purport to be the champions of small business. Okay, they're not going to do it because it's a tax, and we don't want, especially a tax on banks. So the Yellen and her co-governors of the Fed, all they have to do is they say, well, we have a maximum reserve requirement for the banks, which means we're going to establish a maximum amount of money that the banks can hold for free relative to their lending. And if they're not lending, then we're going to charge them for not lending. The Fed has the power to do that tomorrow, and they could do that tomorrow. They have never done such a thing, but they could do that tomorrow. Quite the contrary, to date, actually, the Fed is still paying the banks to hold the cash. they pay them 1/4% just to hold the cash and do nothing with it.
How can the Fed implement this policy tomorrow in terms of taxing the reserve they're holding?
Well, the authority within the Federal Reserve lies within the so-called board of the Board of Governors and the so-called Open Market Committee. That's 12 people. Yellen is the chair. Yellen has the most power. All they have to do is vote it in, and then tomorrow it becomes policy, these 12 people.
And is there impediment on the board itself in terms of her being able to pass such regulation?
Of course, they've never passed anything like it. They have passed the opposite. They are paying the banks today to hold their cash. At the very, 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 very least, they could stop paying 1/4%, and that would then signal to the banks that things are going to start moving in the other direction. That is, you have to start making loans. The banks don't want to make loans to small businesses because they forgot how to do it. They'd rather be out speculating, and they hold their cash as their collateral, enabling them to speculate. That's why they're holding. And again, the number is 14% of GDP. You could take even 10% of that. That would be $230 billion, just 10%. Let them keep 90%. 10% would have a major impact on job creation in the United States.
Bob, I hope you keep an eye on what's going on and report back to the Real News.
I'll be very happy. Thank you for having me on.
And thank you for joining us on the Real News Network.